This is Hear Me Out. I'm Celeste Headley. A company called Kalshi, not Kashi like the cereal, is currently suing the federal government because the company wants to open an online casino for gambling on presidential elections. Now, historians will tell you that placing bets on election results is not new. Americans have been doing that since we started voting. By one estimate, New Yorkers betting on the 1916 presidential election spent more than $280 million in today's money. Now, it's illegal to place bets on elections technically, and betting on the outcome of future events is a pretty complicated issue. But if any gambling is going to be legal, why not gambling on elections?
There isn't a lot of things that bring a consensus to bear. Markets do that. I mean, anybody can enter a market, anybody can trade. Markets automatically affect the average opinion, at least weighted by people's willingness to put their money where their mouth is.
Eric Zitzewitz of Dartmouth joins Hear Me Out in just a moment. Stay with us.
This episode is brought to you by Shopify. Do you have a point of sale system you can trust, or is it a real POS? You need Shopify for retail. From accepting payments to managing inventory, Shopify POS has everything you need to sell in person. Go to shopify.com/system, all lowercase, to take your retail business to the next level today. That's shopify.com/system.
Welcome back to Hear Me Out. I'm Celeste Headley. Just a note before we get started. This conversation was recorded the day before Donald Trump was convicted on 34 felony counts in New York. As a result, you will not hear me and Eric talk about the elephant in the room because the elephant had not entered just yet. We don't know how this impacts Trump's odds of winning the White House in November, though offshore sportsbooks have shown Trump's odds taking a hit in the past few days. Why do we care about offshore sportsbooks, you ask? To answer that, we need to take a trip back in time. Only a little over a decade, though. Back in 2012, a company called InTrade saw around $85 million in bets placed on the U.S. presidential election. In mid-October of that year, a little less than a month before Election Day, InTrade's bettors were predicting a 60% chance that President Obama would win a second term. Polls at the time were all over the place. A Gallup poll from around the same time had Romney winning by a 7-point margin. We all know, of course, InTrade's bettors ended up being correct, though there was one guy who lost somewhere between $4 and $7 million trying to prop up Mitt Romney 2 weeks before Election Day. But here's the rub. Betting on elections is technically illegal in this country. Americans were able to use InTrade in 2012 and did until the company closed because it was based in Ireland. Now, in 2024, there's a push to make gambling on elections legal, and it might sound unnecessary or even dangerous to many of us. But of all the types of gambling that we do allow, this one could be worth considering. At least that's what Eric Zitzewitz says. He is here to make that argument. He's a professor of economics at Dartmouth. Hello.
Hi, how are you?
I'm good. So give us the elevator pitch of what your opinion is there. Is it as simple as we should be allowed to gamble on elections as much as we like?
So I think this is the first form of gambling that should be legal. And the reason why I think that is because prediction markets are, if you want to think of it as a form of gambling, it's a form of gambling that we learn something from. When people are out there trading these, securities, they're establishing a market-based price and a market-based probability of different outcomes. And when they're doing it on an economically meaningful event like an election, we're learning something from that price. We're learning about the probabilities of events that have important economic consequences for people. In contrast, we learn nothing from roulette, we learn nothing from craps, and we learn essentially nothing from sports betting. I'm as big a sports fan as the next person, but it's much more important to me what the odds are of the next election outcome than the odds are of the next Celtics game.
I think it's a pretty big step to try to say that the betting markets could actually tell us something about the outcome of elections, though, considering the fact that even scientifically conducted polls often can't. Even polls are, pardon the pun, a crapshoot, and end up being very, very wrong. I would imagine that the betting on an election would be even more wrong. If people were more accurate in their betting, we would have a lot more millionaires.
Well, these markets are zero sum. So if someone's making money, someone else is losing it. And actually, these markets are pretty hard to beat. And that reflects the fact that they're reasonably efficient. We've now had thousands of them, and so we can do large sample studies of how efficient these markets are. And they're actually pretty close to accurate. If the market price of an event is 20 cents on the dollar, it happens more or less 20% of the time.
So I got to say, I find this idea that we should gamble on markets incredibly dangerous. And I want to walk through as many of my concerns as we can get to in a short period of time. And maybe
Sure.
you can convince me I'm off base. I can see how an economist would love to get the data that would come out of a betting market on election. That makes absolute sense to me. On the other hand, we're already trying to get as much money as possible out of our elections. And an elections, a betting market that involves democracy is yet another place where someone with a lot of money can sway how those go. Now, that one guy couldn't do it for Mitt Romney, but I guarantee you if this became legal and widespread and it meant something to people, that this was as respected as a poll, then wealthy people would be putting their thumbs on that dial. The other thing is simply the fact that our democracy just needs less capitalism and less money in it, not more.
Well, so I think where we might agree is that there's already a lot of money in politics. There's already a lot of money being spent trying to directly influence the outcome of elections by, say, buying political ads of various forms, or paying people to drive vans around and pick people up and take them to the polls. There's a lot of money in politics already that's trying to directly influence the outcome. Putting money into a political prediction market to try to push the price up is actually pretty indirect. And also, it's kind of expensive. That Romney whale, he lost a lot of money, right? And he lost a lot of money not just because Romney ended up losing, but because his efforts to prop the price up meant he was buying Romney for much more than he should have been paying. And that was in a relatively small scale market, right? As these markets, or if these markets are allowed to grow and mature, manipulating them becomes much more expensive. Why? Because when a price looks wrong, a lot of people want to jump in and trade against it if they're able to, if they know the market exists. The more people who know about a market, the more people that are able to enter a market, the more money they can put into a market if the price looks wrong to them. It becomes orders of magnitude more expensive to manipulate a market. So I actually think there's less to worry about with political prediction markets than almost any other way that money can influence politics.
So just a quick side note, the reason that Eric and I are talking about this is because it is a serious question at this point. One company had asked the Commodity Futures Trading Commission to approve this kind of betting. The commission rejected that proposal last fall, but the company has sued the commission. Now they hope that a court will overturn the commission's decision and then open up, I guess, what would be an election casino. I have to say, though, let's go first to the problems that are just associated with gambling, period. I mean, we know through extensive years and years of research that people who are heavy gamblers, I saw at least one very recent study showed that it increases one's likelihood of committing crime by somewhere between 4 and nearly 8 percentage points. Also, if you allow people to make possibly millions of dollars off the outcome of an election, you are yet further increasing the incentive for someone to mess with elections, to do exactly what Vladimir Putin tried to do in 2016, and some argue that he did, although there's scant evidence that it was as successful as he wanted it to be. But I think you're just, the associations with people breaking the law in order to win, and breaking the law in order to influence an election, that's, to me, playing with fire.
Well, so I would note that there are already people with big economic incentives to influence elections. The sorts of sizes of political prediction markets we've seen thus far don't make it possible to develop as big a stake as many of the people. The private sector prison industry had an enormous amount of money at stake in the 2016 presidential election and every presidential election since. Microsoft probably didn't get broken up in 2000 because George W. Bush won the 2000 presidential election instead of Al Gore. So I don't see prediction markets really significantly altering that. I don't think you're, at least with the sorts of scale that I view as being likely, I don't think we're going to see a meaningful increase in people with a big stake in election outcomes. And I hate to say it, but financial markets already there are already incentives for misbehavior. Like after 9/11, there was a lot of worry that the terrorists had shorted the airline stocks, right? And I think where we ended up on that was that they hadn't, that there were some trades that looked suspicious, but they turned out to be, we think, coincidental. I think that's where we came out.
I don't remember, but that sounds right. Yeah.
Relative to that, I don't think this is creating anything new in terms of, the potential to do bad stuff and profit off it in the markets, unfortunately.
Yeah, I mean, I have a hard time buying that, Eric. That's like saying, hey, look, there's already these incentives to behave badly when it comes to elections. There's already these incentives that behave badly when it comes to gambling and casinos. So, what's the harm in putting them together? I mean, the harm is that we're not talking about, Trump's casino going bankrupt. We're talking about democracy, which is already teetering. I mean, our democracy right now is under threat. So, I mean, why would we bring in an industry which is already an incentive for, if not flat out crime, then at least bad behavior?
Well, so I don't, democracy faces, I think, some threats. One threat I think they face is from the fact that we really have two very partisan segments of the media that many people, unfortunately, listen to exclusively. Right? There's a left-leaning media, there's a right-leaning media. There isn't a lot of things that bring a consensus to bear. Markets do that. I mean, anybody can enter a market, anybody can trade. Markets automatically affect the average opinion, at least weighted by people's willingness to put their money where their mouth is. And I think some of the pushback against political markets in particular comes from people who already have an enormous megaphone and don't want that challenge. They want to be able to tell you what the polls say, not have to also pass on what 1,000 people sitting at home in their underwear, reading the same polls and thinking about things maybe slightly differently. I actually think that we need more devices that bring us to consensus, and markets actually do that pretty well.
We have to take a break, but there's so much more to say here. So we will continue our conversation with Eric Zitzewitz in just a moment. In the meantime, this is Hear Me Out, a podcast from Slate, and we'll be right back.
This episode is brought to you by Shopify. Do you have a point of sale system you can trust, or is it a real POS? You need Shopify for retail. From accepting payments to managing inventory, Shopify POS has everything you need to sell in person. Go to shopify.com/system, all lowercase, to take your retail business to the next level today. That's shopify.com/system.
Sign up to The Economist for in-depth curated expert analysis of world events and topics ranging from business and culture to science and technology. You'll get the weekly digital edition, online-only articles, curated newsletters on politics, the markets, science, culture, and China, and full access to The Economist Podcast Plus. The Economist is independent journalism for independent thinking. Go to economist.com and get your first month free.
And we're back. I'm Celeste Headley, talking to Eric Zitzewitz today about whether or not it should be legal to bet on the outcome of U.S. elections. So we've been talking a lot about financial markets. I really, the one thing we've agreed on so far is that there's too much money, or I guess you said there's a lot of money. You didn't say there's too much, but we can agree there's a lot of money in U.S. elections. I would say
Yes.
there is far, far too much. I'd also say that some of the best experts, in fact, a plurality of the best experts in democracies worldwide have said that American democracy is in peril. So I feel like the stakes are high. But let me move on to something else, which is something we've talked about before in this show, which is that we also know through well over 2 decades of research that, since we're talking about the media, that horse race coverage, covering the election as though it were a race or a game, is damaging to democracy. And I'm not speaking metaphorically, that is what research shows us. It weakens democratic institutions, and it weakens the vote as well. So as we're sitting here trying to get reporters to stop doing horse race coverage in order to protect democracy, it seems to me going the wrong direction to literally make the election into a horse race.
Well, so I don't think you're going to stop reporters from doing horse race coverage if it's what people want to read. That's one of the things that's changed. Well, but they click on it. Otherwise, it wouldn't get written. That's definitely something that's changed about the media over the course of my career is the extent to which it responds to what people will click on. So, one place where markets can be quite useful is when parties are choosing their candidates. One thing you can do pretty readily, certainly in a presidential context, is look at the probability that somebody's going to be the nominee of a party and look at the probability that they're going to win the whole thing. If you divide those two probabilities, if at a certain point, Donald in 2016, Donald Trump had a 40% chance of winning the Republican nomination, but only a 16% chance of being elected president. You can divide those two probabilities and say, well, if the Republicans nominate Trump, they have a 40% chance of winning the election. You could do the same calculation for John Kasich or Marco Rubio or Jeb Bush, and you could compare them. There's some interesting theoretical issues that come up when you do that, but you can do a rough and ready comparison of who a party's strongest candidate is. I think when you do that, you tend to find that centrist candidates are forecast by the market to do a bit better. And so I think if we had these markets and if people use them more, particularly in this particular way, it might pull things a little bit back together and might take us away from some of these extreme outcomes, which, at least me personally, that's where I think threats to democracy come from.
These predictions, though, again, they're just not accurate. I mean, we can go back through as far back as we've had scientific polling, at least, and see that polls are, in some cases, only 60% accurate, which is not helpful at all. In some cases, they are even less accurate than that. They were wrong in 2016. They were wrong in 2020. I mean, the polling it's such a common topic of conversation, especially among political reporters, that if you were to put in, why is election polling so wrong, you'd find just page after page after page of experts trying to explain it. So for the predictive capacity of gambling and the odds, to me, is just, I mean, you're not going to be able to count on that. On the other hand, we do know very, very well the effect that reporting on polling has, and it is usually to depress turnout. It can absolutely sway the outcome of an election by making people feel as though the outcome is already done and they don't need to go and vote. That is something that we have really vast evidence for. So again, to allow gambling on an election is simply to bring in yet another trigger to influence elections by manipulating voters. Maybe not intentionally, but that's what's happening.
Yeah, I don't really see it that way. I mean, I think that the fact that a market price comes out of a market that anybody can participate in, that reflects a weighing of many people's opinions, I see that as much less manipulative than if voters listen to one particular person with one particular agenda.
I mean, you may see it as less manipulative, but again, we know that we don't have research on the effect of gambling on the election, but we know very, very well that reporting on polls is very influential, that it does manipulate the way people behave. It manipulates whether or not they choose to go to the polls. It manipulates whether or not they choose to vote in primaries, for sure. So, I mean, we know that for sure. Why would that not be true in terms of reporting on the odds?
Well, so I think what I'm most aware of is that if people think the election is already over, they might be less likely to vote. And this is part of why the media doesn't report exit poll results until after the polls are closed in a particular state. The fact that a prediction market is reporting I think we should only really worry about close elections. Is it going to swing a close election, not a foregone conclusion election? And that's possible. I mean, the part of why I did frame this as if you want to have any gambling at all, this is a form of gambling that we'd learn something from, is that, maybe all gambling is so potentially problematic because of the addiction concerns that we don't want to have any of it at all, or at least any legal gambling. That said, though, it also seems like this has got to be a less addictive form of gambling than sports betting, which has become completely ubiquitous in the last decade or so, thanks to changes in policy. Sports betting, what sports betting does is it gives you an opportunity to bet every single day or 20 times a day. So if you lose, you can get right back out there. You feel like you just missed, or there was a last second field goal, so I lost that bet. Well, good news, there's a Monday night game to bet on too, right? Elections don't have that same sort of tempo. Yes, maybe you lose some money on one primary and there's another one in a month, but it's not the same. It's not the same thing as sports betting in terms of the frequency. And so that's part of why I think, I share your concern about gambling being addicting. I just think that this is a much less addictive form of gambling than the ones that are already, not just legal, but championed.
Yeah, I can see that. On the other hand, I mean, if gambling became legal on elections and it actually became something that reporters reported on, then the candidates themselves would go to every single rally and tell their supporters to bet on them. They would. I can imagine that text coming in from Nancy Pelosi telling me the stakes are really high, democracy's in danger. Here's where you donate to the Democratic Party and here's where you bet. Right? And that's how people know that Joe Biden is going to win. I mean, yes, we may not have an election every day, but they're going to be encouraging people to bet more and more and more.
I guarantee you that if Nancy Pelosi or whoever else had the choice of you sending her a check or you going and placing a bet on InTrade, she'd prefer the check.
That may be true, but they're still going to ask for it.
The main ask is going to be about the check.
I mean, we don't. Neither you nor I know that, and my inclination is to bet that they're going to ask for both of them. But we have to take another break, and we will be back in just a moment. I mean, this is a good argument that we got going here. So let's continue it. This is Hear Me Out, and we'll be right back.
This episode is supported by FX's Clipped, the scandalous story of the 2014 Clippers owner's racist remarks captured on tape and heard around the world. The series charts the tape's impact on a dysfunctional basketball organization striving to win against their reputation as the most cursed team in the league. Starring Lawrence Fishburne, Jackie Weaver, Cleopatra Coleman, and Ed O'Neill. FX's Clipped, streaming June 4th, only on Hulu.
Think you know the Brooks Ghost? Think again. Introducing the all-new, better-than-ever Ghost 16. Now with nitrogen-infused cushioning for lightweight, supreme softness that feels good every step, every street, every single day. So go ahead, take your daily joyride in the all-new nitrogen-infused Ghost 16. It'll turn your everyday miles into everyday endorphins. Let's run there. Head to brooksrunning.com to learn more.
Hello again, I'm Celeste Headley. This is Hear Me Out, a podcast from Slate, and today we're talking to Eric Zitzewitz about whether or not gambling should be legal when it comes to elections. So, do you think there should be, let's say that they do make, this lawsuit is successful against the commission, their decision is reversed, and gambling on elections becomes legal. Do you think there should be any limitations?
So I think what the most likely limitation to think about are limits on the stakes people can take. We have limits on the stakes people can take in commodities futures markets because of concern about potential manipulation. The Hunt brothers cornering the market on silver, things that happened back in the 70s. I think that's the most likely limitation that we're likely to see. It's possible that regulators might also want to limit markets to things where you don't have one person who's deciding something. That seems more fraught, for insider manipulation than something like an election where, there's no one person in control of the process, at least we hope.
So what would you think about limitations in terms of the amount of times somebody can bet? In other words, how would we limit the influence of really, really wealthy people on the odds?
Yeah, so one of the main markets, Predictit, that's running right now, that's in a legal battle with the CFTC. They have a limit on any one market. You cannot risk more than, I think it's $850.
Just a monetary limit.
Just a sizable amount of money, but it does limit the amount of money people can lose if you're worried about people bankrupting themselves, and also limits the ability of any individual to overwhelm the market with lots of money. One issue as an economist that I've noticed that limitation produces is it produces a bit of a bias in prices. It causes long shot prices. The prices of long shot events to actually be a bit above their true probability. Just intuitively, if you have somebody that wants to buy somebody at 5 cents and they are willing to risk the full $850, it's going to take 19 people taking the other side of that bet, selling at 5 cents and therefore risking 95 cents per contract to offset them. And so as a result, you get prices biased a little bit towards 50% in either direction. So just as someone who wants these prices to be as efficient as possible, a stake limitation is unattractive for that reason. But I could see that being a compromise worth making if it made people more comfortable with the idea.
Because this is people gambling on an outcome that's kind of untethered in terms of the values. Gambling experts have said that bets on an election would be very difficult to police. What would determine the price would be a whole bunch of unscientific polls and media reports. As you said, people are watching all kinds of polarized media. I mean, this would kind of be a zoo. I mean, it would be chaos.
Well, actually, markets on outcomes like elections are tethered in the sense that there's going to be an election, we'll see the outcome, and then that security is either worth 0 or 1. And the betting is disciplined by that. People do sometimes talk about running prediction markets on very long run outcomes, like how much higher is the global temperature going to be in 75 years, which is a phenomenally interesting question. It would be great to get a market-based answer to that question. But that doesn't have the sort of nice feature of we're going to observe the value in a short period of time, and therefore the prices can't get too far away from fundamental value. So that's more of an issue, I think, with the longer run markets. Despite how interesting they potentially are. I mean, another nice thing about these markets is, you're absolutely right that there's errors involved in polling. Some of it is random errors. Some of it is kind of systematic bias in one direction or another. What's great about the markets have very strong incentives, or the participants in the markets have very strong incentives to try to undo all of those errors. try to make their best guess about what that poll is really telling you. Now, any one person could be getting that wrong, and even the average of lots of people could be getting it wrong a little bit. But it's still, empirically, I think we know that's true. It's still an improvement on just taking the raw output of the poll and running with that as your prediction.
I mean, we're talking about something that not only U.S. courts have almost universally agreed upon for 2 centuries, but Congress has never failed to recognize that this would be a danger. And for me, the question is why? Why would you do it? I mean, I know we started this out because, and you argued that there's a information, data that would be useful in here, but can you make the case that that data is actually worth all the potential problems this could cause, especially at a time when, again, I think we need to be shoring up our democracy rather than taking risks that unnecessary risks in this case. Like, what's the point?
Well, I think maybe to kind of summarize where we are, I think that those downsides are much less of a big deal than they are for almost any other form of gambling, the downsides we've talked about. I actually think the threat to democracy is real, but I think having an objective aggregation of information, in the form of markets, maybe on the winner of the election, maybe on other things like who the best candidate is, I view that as more likely to be a force that pulls us together. Honestly, I don't think the media on net is a force that does that anymore, at least not to the extent it did, 30 years ago or so. So I view what you're framing as negatives as a little bit more of a positive. And then the other thing I'll say is that, it's not just data for data's sake. Yes, I'm a data nerd. Yes, I love more data. But having these things priced in an objective way is really useful for the efficiency and effectiveness of markets in ways that I think people may not anticipate. One example I like to talk about is in Latin America, when they reintroduced government bonds in the 80s, after the Latin American debt crisis, they came out with the Brady bonds, and so suddenly Brazil had a government bond again. That improved the liquidity and also lowered the borrowing costs of companies in Latin America, because what traders could then do is, if they were trying to figure out how much to pay for Vale, the big iron ore mining company in Brazil, how much to pay for their bonds, they could look at the Brazilian government bond and say, okay, that's telling me about how risky Brazil is as a country. Now, all I have to do is worry about the extra risk coming from CVRD. You kind of break risks down and price them individually, and that makes it easier for markets to function. It kind of builds a bridge between different securities. And that may be something that I have stronger intuition about than people who don't, who aren't kind of as immersed in markets. But I think that's easy to underestimate, is how useful to the economy it can be to have different risks explicitly priced.
So I'm going to give you the last word here, and I realize that what I'm about to say is probably anathema to an economist in the way that garlic would be to a vampire, but I have to talk about feelings and sacredness here, because we're talking about putting a price on something, but what we're putting a price on is our own democracy, and for me, I'm a journalist. I don't want to get all woo-woo about it, but I feel as though there should be some things that are beyond price tags. I think there are some things that are so important and so fundamental to humankind, like democracy and representative democracy, that to make it something just a financial transaction and place odds on it, to me, is upsetting and I guess viscerally feels dangerous. But again, I want to give you the last word here, Eric, before we leave. Give me and our listeners one more reason why gambling on elections should be legal.
So I'd put it differently. I'd say what we're actually putting a price on is 2 incredibly flawed candidates. We're not putting a price on democracy. We're putting a price on the probability that Joe Biden or Donald Trump is the next president. Had these prices gotten more attention, we might have figured out that there were better candidates than those 2 a bit earlier in the process, and the parties may have had stronger incentives to give us better choices. So I don't view this as a threat. I actually view it as an opportunity.
Well said. That's Eric Zitzewitz. Thank you so much for joining us.
Thank you. That's been a lot of fun.
We always love to hear from you, and especially on something like this where the line is so very clear. Let us know where you stand on this. Our email is hearmeout@slate.com. A while ago we had Aaron Tang on the show, and he was talking about the Supreme Court's overconfidence problem. A listener named Jonathan is catching up on some old episodes. All good, Jonathan. And he emailed us this. Thank you for the discussion of the problems of the Supreme Court and their causes. Professor Tang convinced me that overconfidence is an important contributor, but not the main problem. I hope Professor Tang is correct, that some of the justices will moderate in the interest of respectability. I'm particularly glad to hear him advocate for Congress to constrain the court's power, though I'm more interested in the direct impact. Example, protecting voting rights, which the court just showed they are totally unwilling to do. Glad to hear Celeste advocate for 18-year term limits. Professor Tang, I'd very much like to know where you stand on them. It wasn't clear. Do you oppose them or just think they are a good idea that's being oversold? Really great thoughts, Jonathan. And for the record, Jonathan copied Aaron Tang on that email, and the professor sent back a great reply. We'll just read just a part of it. He said, I agree with your characterization that term limits are a good idea that is being oversold. That's an excellent way to put it. 3 cheers for respectful discourse. Let's get more of it. And our email, it's hearmeout@slate.com. Hear Me Out is a podcast from Slate. The show is produced by Maura Currie. Ben Richmond is the Senior Director of Podcast Operations, and Alicia Montgomery is the VP of Slate Audio. I would put my money on all of them. I'm your host, Celeste Headlee. Until next time, speak your mind, but keep it open.
McDonald's presents Burger Reviews by Hamburglar. Today's review, the hotter, juicier classic burgers. Mr. Hamburglar. Robble, robble. He said, of all the McDonald's burgers I've ever hamburgled, these are the hottest, juiciest, and tastiest. Brabble.
Hamburglary is on the rise. Get caught with a medium double cheeseburger meal for $6. Price and participation may vary. Promotion pricing may be lower than meal price. Comparison to prior classic burgers.
Ba-da-ba-ba-ba.